Give me a thought process video in reference to ATH. I absolutely love this coin. If you've been following me for a while, you know that I love ATH. I call this one all-time high, but I don't know how to pronounce it. Aether, I guess. I really love it. It's distributed computing where they use your GPUs so you can play, games without having to buy a new system. But here it was doing nothing. Absolutely nothing. Just horrible. Just nothing. The market, the candles, just the candle sizes, just everything just screaming horrible. And then all of a sudden it boomed. I don't know why. And this was just a couple of days ago, about 15 days ago, 11 days ago, 12. Let's see, what's today. All right, so we can call it 11 days. But here, and it goes to the same concept, and this is not a woulda, shoulda, coulda, woulda video. This is basically, just if this is a project that you like, or any project for that matter, and this goes for every coin. What we're doing is we're going for the highs. Now, could we have done this high? Sure, this one would have been better. So this is kind of like a zone that we're in, but this would have been and you can actually see it too. I didn't even realize that, but this happens on like all these coins where price went right to it and it came back down. It went right to it, came back down. And then now, because it's what it's doing is testing, it's trying to go, it can't do it. It's trying to go, it can't do it. And here, if it was going to reverse, and it's really easy to do this, and so many people do this after the fact, but this is what I'm showing you all the time. This is what I show you, where we go up, we come down about 50%, which is good. 38 to 50%, this is good. Then when we come up about 50% of this leg, 38 to 50%, we're either going to roll over potentially to attack all this and then maybe attack this, or we're going to come up to attack this. We did come up to attack this, but we still have this high. So we got rejected 50% of this leg, 38, 50%. And then we start coming up. And instead of rolling over potentially to attack this and coming down, we go to the upside. And now let's go ahead and take off some of these. Now what we're doing is we're actually seeing that we broke above here. And this would have been a nice time. If we were looking at this, this would have been a nice time to enter the trade. Again, woulda, shoulda, coulda, woulda. Purpose of this video is not to do all that. Purpose of this video is to show where there's potential bounces. So here, we had this really nice run up. We would like to see it pull back to at least the 38% mark, which is the 0.382, and then a bounce up. And this is when it's very aggressive and a healthy move. This is the minimum I want to see. The healthy move is 0.5. So we come down, we break through the 3.2, we come down a little lower, we come up. So this move is about 38% from the very top to this bottom, about 30%. We roll over and 50% of this leg said, nope, I'm coming down, breaking this. We come down to our golden pocket, which is beautiful because in the golden pocket is sometimes where we like to bounce. And sure enough, it came up, great. So we're looking for the break of this, but granted this, so what I want to show you is that this right here, this come up is very small. It's like 23% possible. Then it came down. So I don't like this move. We have a higher chance of it coming up to maybe here to coming down. And I'm not saying that because I see this because, well, eventually it went up. But this is what normally happens. And again, this is all just probabilities that we're looking at. Then, of course, if you're liking this video, smash the like. Definitely smash the like. This is the whole thought process. And one thing that I do not do is I don't, harp on how you could have, woulda, shoulda made money. What I'm doing is we're going to get to the point where we couldn't make money. Now, as the price is coming up, let's see here. So the point of this is this, the golden pocket, and then also the 0.618, I call it the 618, and the 6.5 or 0.65. Here is another little tight level, and we end up bouncing just above this, but we're in the golden pocket. We came to the golden pocket, came up, came down, looking for this level to break. Even though, in my opinion, it's weak, I would like to see a little bit higher just due to this leg. This is still good. And if we want, we can use the fib retracement magnet tool from the very high of this to the very bottom of the wick. And we can see that we're at the 3.2, okay, and we tap the 0.5. We tap it once, twice, and 3 times. So now, if we break this level, this is a good time to enter. And all this is market structure in a nutshell. You know, all this stuff I'm showing you is market structure without doing all the complicated terms or anything like that. They're just showing you where we need to find a level so that it breaks above. We want to break above this level. We can enter a long. We don't want it to break this level now because this is the lowest point. Then it comes up and there's, you know, strong lows, strong highs, weak highs. But without going into, you know, too much detail, this is basically saying that this move could potentially continue going to the upside because this low took out this high. That's basically what it's saying. Now we have another run up. So on this run up, and you can do this for every run up, but these are the most significant run ups. So we have another run up. We would like to see it pull back to at least the 382 before continuing up. It didn't make it. Coming down to the 0.5, this is where I would like to see this. To me, this is healthy for it to come down to. It doesn't do it. Yet again, it goes into the golden pocket. So in the golden pocket, now we start coming up. We're doing really nice. We had a small retrace here coming up. So when do we want to long? The safer entry for the long is the break of this level. However, you know, we have to have, you know, we need a pullback. So price action does two things. One, goes up. Two, goes down. It'll go up until it's done. It'll go down until it's done. So it'll go up until it finds resistance. It'll go down until it finds support. Sounds simple, right? Well, it can be not as difficult as people make it. There could be a moving average that it touches. There could be a order block. There can be a demand zone, supply zone. There can be all this stuff, but it can easily break those levels just as well as it finds support resistance. So what I'm looking at, price comes up. We want to, you know, go long once it breaks this level, comes down, comes up. And see, here's the same thing. Like if we do the fib retracement, we go from the absolute low to the high. We can see 382, 0.5, beautiful bounce. We come up about 50% of this leg now. And then what do? Here's our decision point. Are we going to attack this high to attack this high, or attack the low to come down for this? And then sure enough, we attack the low. Nobody knows what's going to happen. But so what we're doing is we're reacting to the price action. Then it attacks this, awesome. And then it goes down even lower. Taps into our 61865, comes up. So now in order to go long, we need to break this level. In order to go short, we want to break, I would say this level. Let's see here. Should we break this level? Now, granted, I know the price went up, but I'm not like other mentors where I'd say, oh, no, we won't do it because we know it went up. Would I break this? What I would do, because it came down so hard, I would have to wait because now I'm thinking the price, because it came down so hard, price may come up here to about 50% of this move, and then I want to see it break this. This would be a safer entry because now we created a pivot. So that's how I would enter the short. And I'm not just saying that because I see that it went up. There are some times, and you'll see it too on my live streams, where I'll say I enter the short and it just blasts off, you know, to the upside. Or I'll enter a long and it takes a dump and it just goes to the downside. So just remember, guys, we go live every single day, Monday through Friday, 12 p.m. Eastern Standard, Saturday and Sunday at 4. I'm showing you how to trade. This to me is extremely important, that we catch all of these, you know, potential moves, and we understand the thought process that goes behind the entries. Now, here we go. So the first one, we bounced in the golden pocket. The second one, we kind of bounced in the golden pocket, but then we broke the level. Now we're bouncing off of this 61865. We're coming up here, very boring, absolutely horrendous price action. This I don't like. Then it comes down, gives us some kind of structure. Okay. Bounces once again, 61865, and then start shooting up. In order to long here, we would long this level, or we could do this one. For me personally, I would just wait for this one. Since these levels are so close, what I would strongly recommend, take notes. All this stuff that I'm giving you is the blueprint on how to trade. Very important. Take notes. Let me know if you're taking notes in the comments. Let me know. So I would actually enter the break of this. We enter the trade, and because it ran up, I would expect it to come down to maybe here to come up again. So this is what I'm thinking. We have our level here. Price breaks up. Now, because it moves so much, we would put, and whenever you enter the trade, always scale in. None of this is financial advice. All of this is for entertainment purposes only. I would scale into the trade, and I would have a lower entry right around 50%, because there's a really good chance that we may come back down. This may be a fake out. You know what? On second thought, I'm not entering. I'm not entering right here, because the chance of it coming down is pretty significant. So what I'm going to do is I'm going to wait. I'm going to wait to see if it pulls back. If it does, then what I'm going to do is I'm going to wait for it to come up, do a lower high, which is fine, and then do this. And then now what I can do is I can actually enter here now, because now this is a much safer entry than this. This is very aggressive. So if you wanted to, you could enter here. This would be an aggressive entry. My aggressive entries are yellow. My safer entries are white, because I'm expecting something like this. For me personally, I would probably just wait it. Now it does take off, then it comes back down to this. Now it didn't have to come back down to this. It could have come down a little bit further, but this came down really nicely. And this right here, this move is about 38%, 50%, which is perfect. This is what I'm wanting to see. And then it breaks this level. So if I miss this, well, now I enter here and now it goes up. So what I want to show here is the 618, 0.5. Price action after doing this mess. It does come up and then it retraces. Man, does it pull back hard. Now for the pullbacks, once again, we're expecting about 38%, 50%, and it just continued coming down. Oh no, crap. However, you know, if you're trying to do a safer entry, what you want to do is this type of entry. For me, I see a lot of traders out there that are doing, you know, lower entries. In my opinion, every market, you know, bull market, bear market, there's segments in those markets. There's the beginning, the middle, and the end. And even though we're, you know, it just depends on which portion of the segment we're in. And also if we're in bullish in that segment. Right now, we're not bullish, guys. And during this time, we're not bullish. This is on the 15-minute time frame. We're not bullish. Now, I see a lot of traders where they'll actually put an entry at the 0.5, and then they'll put an entry maybe at the 618. And sure enough, it comes down, it hits it, and then hits their lower entry, and then they get stopped out. Like, this did not need to happen. Could you have nailed the bottom, let's say here, and then it just goes to the moon, never sees us again? Sure. Could you brag on X, how great you are? Sure. However, we're not here for that. We're here to make money. Nobody cares about your percentage. I'm telling you right now, nobody cares. Like, everybody does it for bragging rights. Nobody cares. You know, if you make 80% on a $1 trade, it doesn't affect me. If you make 4% on a $100,000 trade, it doesn't affect me. So these are just, you know, for bragging rights. Now, granted, do people post? Do I post? Yes, of course. Just to show you that we know what we're doing, like we know how to trade. Now, be very careful with everybody who posts, because, you know, they could lose 20 trades in a row doing 50x or 10x or whatever they're doing, and then they get one trade that works, and then they show you how great they are, and they can trick you. So be very careful. Always back test everybody. Like, even my stuff, back test it. See if it works. See if it works. Then, so that was the example of, you know, not entering. What you want to do is you really want this. Play it safe. What we're trying to do is we're trying to minimize your loss and maximize your gains. It sounds easy, but it depends on your risk management and your risk tolerance, and basically, you know, how you're following other people's trades. Then we have this move. So once again, we almost bounced right here in this level. We almost bounced. We're coming up, and then when we came down, we tapped. We actually entered this 618.65. We went up. We came back down again. We tapped it. In order to go long here, where would we go? The break of this level. Do you realize how non-complicated I'm making trading? When would we short? The break of this level, with the anticipation of it coming down to maybe here and maybe bouncing. You know, what if it bounces and then it breaks that level? Great. Let's continue that short. So this is what I'm showing you. I'm literally showing you market structure without getting complicated. Then we come up, and now here's our level again. So here's our level to where the price might bounce off of. But if, let's say, the market doesn't do well, or maybe people are starting to take profits on this one, it might come down. Now I started doing this and I said, you know what, let me record this. So if you like the thought process that I'm doing, smash the like if you haven't already. Leave me a comment or two. Let me know what you think about this. Is this like too easy? Is this something that your mentors are not teaching you? Like, let me know in the comments. Now the price was here. This was a red candle. We were way down here. And I'm thinking we're going to come up to come down. What happened? Price actually went up. Now let's see if it comes down. Again, we're on the 15-minute time frame. For this one, I'm using UTC, and you can see it. Oh, you can barely see it. Let me show you down here. In case you want to fact check me, this is UTC -4 for my time frame. And when I started doing this was at 2015. So at 8:15 Eastern Standard Time. This is when I started doing this. And I said, let me go ahead and record. But the price was right here. And now it came up to this level. Let's see if it comes down. Now, am I right all the time? Nope. If I was, I'd be a multimillionaire just on trading. And I'm not, because I lose. Sometimes these are completely off, and sometimes these are spot on. So what I'm looking for is I'm looking for a potential bounce above this level. Why? Because we're kind of seeing a pattern. I'm not sure if y'all caught that. Here, we went into the golden pocket. Here, we went into the 618. And here, we went almost to the 618. Here, we tapped the 618. And then, so now what I'm thinking is there's a really high chance that we may pull back to around this level or into the 618. So it could go, let's say it could go about here. And we'll do this in white. Or it could come all the way down. And then come up. And let's see here. Let me kind of think about this as far as the price action goes. Up, down. Okay, maybe reverse here. And then from here, either come up and then kind of dump, or potentially do this, where we might even just bounce maybe a little bit higher. Come back here into this zone once again. Probably come down, do a higher low than this, and then continue to the upside. So this is my thought process. All right. So if you made it through this entire video, let me know in the comments. For everybody who makes it to the very end and taking notes, I guarantee it, you are going to be very successful in trading. For those of you who kind of fast forward or jump around, you're taking shortcuts, guys. Shortcuts are not going to pay you. I'm letting you know right now. Watch the videos. I have a complete series on how to trade for free. I want to get rich with you, not because of you. You do not have to join my VIP Telegram group to learn how to trade. I show you every single day, Monday through Friday, 12 p.m. Eastern Standard, Saturday and Sunday at 4. I show you how to trade. I show you that trading does not have to be as difficult as everybody makes it. Now, did you notice that in this video, I did not mention the words mitigated? What does that mean? Touch, tap, re-enter the zone. Why? I don't use mitigated. I don't use SFPs. I don't use all these other terms that everybody else uses, because what they're trying to do is they're trying to sell you something. For me, I have nothing to sell you. If you want to join my group to have access to me almost 24/7, then reach out to me, trade_intuition on Telegram. I will show you all this stuff. Granted, will you learn faster? Yes, of course, but you don't have to join the group to learn faster. You know, just watch my videos. I have a complete playlist for you. So this is my thought process. I thought here we're going to come up to possibly come down. Again, I could be completely wrong, but we'll see. That's all I got, guys. I do thank you very much. Once again, if you made it through this entire video, you are a freaking rock star. I appreciate you greatly. And of course, you are my favorite. Thank you so much. We'll see you in the next video. Do not feel like you have to be in a trade all the time. And As always, be very careful. Have your risk management. Risk tolerance is very important. I appreciate you guys, and let's make this money. Take care, guys. We'll see you soon.